Are you terrified of getting that dreaded letter from the IRS? Here are 5 red flags that can lead to increased chances of IRS audit. My name is Daniel Kotz. I'm a licensed tax attorney. I help people in all 50 states get the IRS off their backs and out of their lives. If you're being pursued by the IRS for back taxes or unfiled tax returns, visit my website, set up a time to meet with me, and I'll help you get the IRS off your back and out of your life for good. On this week's video, we'll be discussing IRS red flags that can set off the IRS radar and flag your account for an audit. Inconsistent reporting is one of the biggest things that will lead to an audit. The IRS gets information from all your employers and contractors and W-2s, 1099s you receive, and they have all of that information. If your income reported doesn't match what they have, it raises eyebrows. So make sure all your records, all your income sources are reported accurately, and you keep meticulous records. Additional sources of income like rental properties or a side business, be extra vigilant in your reporting. Now, taking excessive deductions can make the IRS suspicious. Although deductions are part of our tax return, they're allowed. If you overdo it, they're going to notice. All your deductions need to be justified and supported by appropriate documentation. Make sure you have invoices, receipts, other proofs to substantiate your expenses claimed, especially if they're high compared to your income level. Being self-employed can be particularly rewarding, but it can also lead to an IRS audit if you're not careful with how you report. The IRS pays close attention to self-employed individuals because it's easier for self-employed individuals to take deductions they're maybe not entitled to. So keep meticulous records about your earnings and your expenses for self-employment, and remember, honesty is always the best policy. The IRS and the Treasury keeps a keen eye on transactions involving large amounts of cash. Now, while cash transactions are legal, they can raise suspicion if they're excessive or inconsistent with your reported income. So if you deal with significant amounts of cash, it's important to keep meticulous records about all your inflows and outflows, all the transactions. Make sure you keep thorough records. While deducting legitimate business expenses is allowed, be careful of claiming personal expenses as business expenses. It's a red flag for the IRS. Don't blur the lines between your personal and your business. Keep personal expenses separate and claim what's only truly spent on the business. Only truly business related. Remember, it's not about avoiding taxes, but rather about being honest, organized, and meticulous in your reporting. If you have any more questions, contact my law firm or check out the rest of my content. I make videos like this informing the public of what happens when it comes to the tax law and how to deal with the IRS. No matter where you're located across the U.S., I can help you get the IRS off your back and out of your life. Contact Kotz Law today. Let's start building your defense against the IRS.